morning, everybody. How's everyone doing? Brand new trading day on the docket. Brand new trading week on the docket. And might I say, I am very thankful that I made the decision to go enjoy Friday because, man, it's back to like 50s, overcast, raw, rainy, wet, cold, not good. So I'm super thrilled that last Friday was the way it was. And, we're just dealing with what we've got. We're dealing with what we've got. We're making the best of it. And hopefully we can break out of this not so optimal weather pattern in the next couple of days. But anyhow, what's on the economic calendar for this morning? Good morning, everybody. Good morning, good morning, good morning. Hopefully your weekend was a bit warmer and more pleasant than mine. But anyways, good morning, good morning. I see you all. We've got Roger Tutt, Leroy, Michael Cobble, Davey Day Trader, Matt Rosen, David Ball, G Hun, Crypto Commando, Quest of Quests, Mickey, Black Diamond Off Grid. Who else is here? Mora, INF the Based Homie, of course, Fanac, Paul, DPJ Hicks, Cipriano, Victor, Maria. Good morning, everybody. Sammy Sams, Rebecca F. Trading Vibes is here. Who else? Byron Jones. Good morning, folks. Good morning, good morning, good morning. Is the mic a bit echoey? All right, if I get a couple more mic echoes, I'll do good old unplug replug. Mic a little bit echoey. Is the microphone a bit echoey this morning? I'm gonna looks like the answer to that is yes. So I'm just gonna give it a couple of in and out unplugs. All right, testing 1 2. Testing 1 2. We back? Are we back? Are we back? Should be back and less robot-y. Hopefully we're back and less robot-y. And that's that. Good morning. Much better, way better, way better, way better. Awesome. Little reset never hurt anybody. All right, cool. Let's get down to business here. Economic calendar. This is what we have on the screen in front of us. And of course, there's nothing really crazy happening this week. We're going into a Fed blackout period. Got to slow it down this morning. A Fed blackout period where they will not be coming out and they will not be speaking because we're in that sweet spot of roughly 2 weeks ahead of the FOMC announcement. We will be getting services PMI at 10 a.m. this morning. That's going to be the big deal for the week, and it's really the only deal for the week. And the reason being is that we know services inflation is sticky. If the PMI starts to come in a little bit, shows us a little bit of contraction over here. It'd be great if it didn't come in at the forecast at 52.6. If it came in, close to the previous or even underneath 50, that shows a little bit of contraction, right? And perhaps that may indicate that down the road, the cycle of inflation in services is coming down a hair. We'll see. We will see. So that's at 10 a.m. Do expect some morning volatility around that number. I'll be posting in the Discord 5 minutes ahead of time. I'll be saying, hey, 5 minutes until news, tighten up your positions or whatnot. We'll let that news come out at 10 a.m. and then we will sort of see how the dust settles, so to speak. We'll see how that dust settles and we'll take it from there. All right? So that's the big deal for the week. Of course, Thursday, 8:30 unemployment claims. That's nothing new. It happens every week, and that's really it. If we take a look at some stock-specific headlines here this morning, the top-line figures are a bit of a mixed bag, with the NASDAQ being the only thing red here, but not by a whole lot, only down 15.5 points. In terms of percentage, it's 11 basis points. Everything else is green mildly. I would start to think of them as just being flat here in this morning's session. So that's top line. In terms of the big headline this morning, stock futures are a little changed after the S&P's best week since March. What else is going on here? There's oil stuff. Did we see? Yeah, there's some OPEC meetings happening all day on Sunday, so those are kind of in the rearview mirror. But oil prices rise, so oil's up. We saw that up here anyways. So we'll take a look at we'll maybe take a look at that chart, but it's not really the end of the world right now. What else is going on here? Downgrade to a cosmetic stock. It looks like Estee Lauder is the name, if the image is going to be correct, from Oppenheimer, excuse me. So downgrade there. Biggest movers pre-market, we've got Palo Alto, Apple, and Target. We'll take a look at definitely Apple. That's obviously on the core list of companies. Maybe Target, though, as well. Palo Alto, not so fond of that options chain. What else is going on here? Boycotts hit stocks hard. What may be next for Target and others caught in the backlash of all of the all the advertising campaigns that have been going on there. So, the stock is, to some degree paying for that. What else is going on here? What else is going on? Stock-specific stuff. Stock-specific stuff. Really nothing nothing overly specific to stocks as I'm scrolling through here. There's some political stuff, this, that, the other stuff, but a downgrade to Dollar General, that's semi-important, right? Says that the retailer is not as defensive as expected, which is kind of concerning, especially if you're in the camp of those who fall into a recession, right? If you're thinking, oh, the economy is going to fall into a recession, seeing MS downgrade Dollar General, that's not really, it's the prices are too high there. Prices are too high there. Nobody's going there to shop in that lower cohort. So not a big fan from Morgan Stanley. Downgrade there. That's 2 downgrades on the morning so far. What else is going on? Some robotics stuff. It's not really stock specific though. That's it. I mean, that's really it. There's nothing on the lineup this morning that's overly impressive. So we're just going to move along. In terms of our earnings calendar, what do we see here? Nothing on today's session worth paying attention to. Nothing on Tuesday's session worth paying attention to. Nothing. The earnings season is basically over for the most part. You might want to watch out for Campbell's just in terms of consumer consumption. GameStop, get your popcorn out and kick back, relax, and watch the show. Anything on Thursday? DocuSign might be interesting. DocuSign might be interesting just because of the way it's traded in the past, but that's really it. And then Neo perhaps on Friday before the open. That's all we've got on the earnings calendar, though. Not a lot going on from the sort of more fundamental perspective here. I think the charts are where we want to hang out this morning. The charts are definitely where we want to hang out this morning. So let's take a look at what's going on over here. I'm just going to adjust the screen because I think that there needs to be a little bit of this and a little bit of this, perhaps. Now we're looking better. And a little bit of this. And then a little bit of this. There we go. And now we're cooking with fire. All right. So let's get started. This is the bread and butter. This is exactly what we have every morning to look forward to. It's our good old ES futures. And we want to see what's going on here. What's going on with the ES futures? Can we learn anything about the price action? Better prepare ourselves for the open. So 4-hour time frame chart's always up first. What do we see from a trend perspective? Clearly, sitting in an ES 4-hour uptrend. I mean, that is undeniable. Higher lows, highs, higher highs, and higher highs as of Friday's move here. Really impressive move in the upward direction there. So one thing I think we can all agree on, and the main point of the weekend update video, which came out on Saturday night, is that because we are sitting on a higher high, you've got to be very, very cautious about new money long entries up here at the top, simply because there's not really great risk reward. Now, as this overnight session has put in a balance range here, we'll see this on the 15 as we move through, maybe there's some scalps we can get away with, but just in the context of the overall trend, I think it's worth being cautious of new money longs sitting on the highs. So that's the 4-hour chart. Just understand where we're at in the trend sequence. Sitting on a higher high, the trend is up. The markets are overall more bullish than bearish. Let's drop it down to an hourly. Take a bit of a closer look at the trend in hand here. So most of our levels underneath us are not, like, a lot of stuff is out of play, right? This gap is not necessarily in play today. This level all the way down here is not necessarily in play today. These, right? So we're away from a lot of the levels and zones that we've been talking about for what felt like months and months and months all throughout April and May. And June has so far brought us a bit of a more sturdy breakout. Here. So noting that, we do have to start looking for some overhead levels. We don't really have anything above us. So on the hourly chart, what we've got to do is we've got to go extend it off. We've got to take a look here at a full length. Let's go with a 360. And let's look left. So we just closed this gap. This over here is the gap that we just closed, right? That was Friday. And now we have to continue to look left at these prior pivot tops and bring in some levels here. So what I like to do is just bring out the good old rectangle. And to me, this is the next big zone that you want to be cautious of. Let's put a little box here and we'll go ahead and bring that way out. We'll come back to business. Good. All right, so that's in play. We want to know where this high is, and we'll do the same exact thing. We will just bring that out to the current month and good to go. All right. So we understand where the next big two resistances are coming in. If we go back to the recent price action, where is that in relationship to where we're at? It's still quite a ways overhead, right? If I auto zoom, you can see that we've closed this gap, and those next resistances are way, way overhead. There might be something here, might be something to say about this level right around in here. I'm going to bring this one into view, and then we'll go from there. Oops, we don't want that. We want to go back to, what year are we? What year are we? Okay, let's go June 2023. June, let's find June. There it is. All right, so good. Those levels are on the screen. Let's go and zoom in on with the extended hours back on and see what we're dealing with over here. So there's that larger level. You're going to start looking at 4340 upside, and then beyond that, right, 4375, 4400. Those are the next major overhead targets. Now that we're kind of all on the same page of where those are coming from, I mean, back on the hourly chart, there's definitely some room to continue in the upward direction here if we can breach Friday's high. So that'll be the main thing to carry forward is like, yes, we know that we're sitting on a higher high. We know it's not ideal to be chasing new money longs up here, but for the most part, like if the trend prevails, there's still room to run. 4340 is kind of that next sweet spot up here to be looking for. All right, so if the market pulls back, let's talk about the other case on the highest time frame, or the higher time frame, the hourly, and then we'll move to the 15. If the market pulls back, is it the end of the world? Is the trend in jeopardy? No, we can certainly search for, at this point, a higher low on the hourly and 4-hour time frame charts. If we pull back, what would be the ideal place to pull back to and support? Probably somewhere around in here. That's going to be our 4230 level, right? If we do something like this, 4225, that's kind of the ideal picture perfect place. Could that mean a violation of the previous day's low? Technically, wouldn't be ideal, but that would be the best pullback over time. All right, so since we understand the structure on the high time frames, where the levels are coming from, let's go to the 15-minute chart, get a bit more granular with the analysis here and what's on the docket for this morning session specifically. So let's look at where we're at in relationship to Friday's range. Here we go. 3 questions always prevail every single time. They guide us each and every morning, day in and day out. Question number 1, where are we in relationship to the previous day's range? We are opening inside of the previous day's range, and technically, that is a balanced and neutral indication. So we always ask question number 1.5 when that's the case. And 1.5 asks, where are we in relationship to the value area? Here's value area high. Here's the value area low. Value area high, for all intents and purposes, is almost the same as the prior high of day. Use 4297.75. 4297.75. All right. So anyways, the open is still set to be inside of the value area, so the market's content here with two-sided trade back and forth resuming. So really balanced based on question 1 and 1.5. Simply put, this is a P for patience indication. There's not a whole lot to glean from opening inside of balance, inside of value, inside prior day's range, directionally on the open. This is more P for patience out of the gates. Question number 2, what's going on with the overnight inventory, or excuse me, range? Range is first, then inventory is question 3. Here's the overnight low, here's the overnight high. Very compressed overnight range, especially in relationship to the range we experienced on Friday. So that's a balanced indication just based on the size of the range, but even the open is slated to be sort of centralized in that overnight range, perhaps on the lower edge of the upper third, but it's still a balanced indication. We're not pushing into new overnight highs. We're not pushing into new overnight lows. The market's pretty balanced at this point based on question 1 and 1.5. So question number 3 will be the ultimate decider. You know, is it going to be skewed net long, net short in the overnight session? To do that, you just once again extrapolate the prior day's settlement. Same thing as saying the close. How much time was spent above, how much time was spent below? You can see that they were probably a little bit net short, but not by a huge margin. Not by a huge margin. Perhaps only like, I don't know, maybe something like 55% net short this morning. And the reason I'm going so light is because obviously the move has been corrected. So there's 55%. You can see that this down move has been corrected. And now we're just clinging to that settlement price from the Friday session. So there's not a whole lot of shock and awe this morning. There's, as a matter of fact, zero shock and awe. We're still opening inside of range. Very much similar to the settlement from the Friday session. The overnight range is compressed and we're centralized, and we're opening in the value area of the prior day session. So if anything this morning, you want to like sit on your hands, collect some data for the first little bit and say, okay, is this trend going to continue in the upward direction, or are we going to search for a pullback today? And let's start talking about some scenarios, right? If we think that P for patience is the play on the open, then we're waiting for an opening range. In a picture-perfect world, we get some sort of opening range. Remember, folks, whenever I draw this nice, pretty squiggly mark with my crayons, it just represents that we're waiting for a balance to form. We're waiting for some sort of high to be set and be respected, and the same thing on the low side, some sort of low to be set and thus respected. We form an opening range, and then there's always 4 obvious trades that can get us moving. First one's a breakout. Second one is a breakdown. Third, can't count. Third one is a fake break to the upside that then violates the bottom end of the range, more powerful because we have trapped longs, and the same is true but opposite on the downside. Something that does this and then breaks the top of the range is more powerful because we have trapped shorts. Those are the 4 obvious trades. If you're not comfortable taking the break of the top of range, you wait for the first high or low pullback. Over the top of range, you wait for the first lower high retracement under the bottom of range. Those are the I guess you would say 6 ways, if you want to include those pullback maneuvers to get involved. All right, so opening range is the first thought in value area, in between the overnight range, overnight high, overnight low, and then from there we will look to go with a direction that the market chooses. I'm pretty open to either direction at this point in time, considering the trend and considering where we're at in the sequence. Obviously, hopefully folks understood who Zach De La Rocha is. If you don't know who Zach De La Rocha is, someone in the chat will tell you. All right, so if you watched the Saturday video, or just the weekend video, we'll call it, and you understood the reference, let's hear it in the chat. I thought that one was a fairly obvious one, right? Bulls on parade. But anyways, because of that, I think that the market's bullish enough to continue in the upward direction here without pulling back just because we're sitting on a higher high. There's no big technical resistance here that's going to send markets to zero. There's no big, nothing really stopping markets from continuing to that next overhead level we have, closer to 43.30. Just going to clear up this little 6 options, right? 43.30, there it is, 43.30. Rage against the machine. Rage against the machine, come on. You think I'm drunk? I am certainly not drunk. Zach De La Rocha. Come on, he's the lead singer of Rage Against the Machine, hit singer for, of course, Bulls on Parade. I suppose they were speaking about not, of course, the market, and they obviously had a different agenda there. But anyways, it's such a legendary song, we can sort of put aside the beliefs of them. But anyways, all good. All good. Joe Kim. All good. All right. So, yeah, legendary stuff. Legendary stuff. I mean, the song will go down in history. So, all right. Services PMI at 7 a.m. Mr. Z, I think you are probably in a different time zone. Services PMI is at 10 a.m. Eastern time. 10 a.m. Eastern time. You're probably maybe the West Coast. Would that be West Coast? Perhaps West Coast. Anyhow, yeah, Rage Against the Machine. All right, let's keep going here. We understand the ES. If we're raging on, if the machine keeps grinding, we're looking for higher out of an opening range. It's not the end of the world. Just because we're on the higher high, it might be a little bit more difficult to pull off in the upward direction. So please just be mindful of that. Again, you might want to wait for a break of the opening range, and the better trade entry is probably on the retest of the prior high of day. Right? If we can get that pullback out of an opening range after a break, momentum is strong, market internals look great, then guess what? We'll look to go long here. We have tight risk. If this indeed is the formation that comes to us, we will look for an entry here, tight stop just underneath, and we'll look for more upside out of this market. If you want to risk this at your prior high of day on a break and retest there, good to go around your 4,300. I would suppose the only reason that the market may stall out here is psychological 4,300. Right, psychological 4,300, obviously it was the resistant point from Friday, so there's that. But for the most part, break and retest 4,300, break and retest prior high of day. That's your interesting move in the upward direction, all right? So that is your ES. In the downward direction, things get interesting if we do this. Opening range fake break, and we come back down underneath. This is where I think the deeper pullback situation starts to unfold. I'd be very, very mindful on today's session. if we try to break the previous high of day and we're getting no price acceptance above that zone, this starts to look dangerous for a pullback, a deeper pullback, right? I would look at your low of day. I would look at your overnight low. I would look at both of these places as entries for downside because we do technically have thinner structure from the little breakout of the opening range on Friday, right? So underneath low of day, whatever the opening range wants to grant us after a fake break through the top or underneath the overnight low as well, those are two pretty decent short side entry points if we have the proof that sellers are stepping up here. All right? That is that. That is that. So the two things, I'll rank order for you what I would prefer to see the ES do. Number one, preference for the ES would be opening range, break, retest higher low, and go over prior high of day. Why would I prefer that? Because it's easier to always trade in the direction of the trend. We know that the 4-hour time frame chart is in an uptrend. We know that the hourly time frame chart is in an uptrend. The 15-minute chart, for crying out loud, is even in an uptrend, all right? So that's the easiest setup to spot. Probably the one with the most conviction and highest confidence. Second one is because we understand where we're at in the trend sequence. It wouldn't be the end of the world if we go opening range, fake break through the top, come down through a low of day. So once again, low of day is important there. Or the more, apologies folks, or the more conservative short entry would be underneath your overnight low. Why overnight low? Look left. Look left. Prior support, right? Thin structure underneath. Same thing can work in the downward direction. If you have the proof that sellers step up, you can get a break, retest lower high under the overnight low. Same thing could technically happen here underneath a low of day as well. We just don't know where that's going to be yet. So both of those are on the table for the rotation to the value area low. You'll notice that's where the breakout came from, here. All right, so that's the short setup on today's session. That would be rank ordered number 2. Deeper pullbacks that really take out the prior low of day, less ideal, but still manageable on the higher time frames like the 4-hour, like the 1-hour, for a higher low pullback. We would have to reassess, and hopefully there's some indication that we can get short on here, and then sort of just, wait and monitor for that continuation in the downward direction for that specific trade. There's no big short setup that's going to send us to zero. There's no big short setup that's going to, put markets back in a downtrend, and therefore anything that really goes further than your value area low is a number 3 rank ordered setup for today's session. It would be great if the ES just kind of put in consolidation, maybe found support here, balanced, and then we have an inside bar that sets up and then a break onto Tuesday or perhaps later on in the week. All right. Those are the situations I would be super interested in for the ES, and we'll take it in stride, right? We will take it in stride. I think if anything on the open, we want to be P for patient. We just talked about all the reasons as to why. We want to take in some information, let that opening range form, and see what the market internals are doing to either support or sort of reject the idea of the market balance, right? So that's the open. I will say, do not get FOMO. If the market breaks here in the upward direction, just starts ripping out of the gates, do not get FOMO. Do not beat yourself up. Don't say, oh, I should have been in longs right out of the open. I should have done this. I should have done that. No, you shouldn't have done anything, right? If the market breaks big time out of the open, don't get, FOMO. Wait for a manageable setup that pulls back over the prior high of day, and I'm sure there will be another trade around the corner to get involved on the long side. Same thing can be said about the downside. If there's a big break in the downward direction and, we find ourselves putting in the range down here on some sort of big bear flag out of the open, guess what? There's no indication for that pre-market. There's no reason to beat yourself up. There's no reason to get FOMO. Wait for the next trade to unfold. All right? All of the indications that we have here pre-market would say P for patience. Let this thing simmer out. Let it do its thing. And what I'm looking for is primarily this. And then secondly, something that might look like this. All right? Those are the two things that I would prefer to see on today's session. And number 3 is like this or like this. Untradeable, basically. Untradeable. All right? So that's the morning open. We'll, of course, send some updates as things unfold in the Discord and keep you up to date with the latest and greatest. But let's move along. Let's take a look at our NQ. What's going on with the NASDAQ 100 NQ? Big shout out to Landon joining as a member. Let's go. Been watching for a while. Learned a lot. Appreciate it. Appreciate you joining there, Landon. And obviously, it's a re-up because you already have the gold cash bag. So cheers to that. Cheers to that. And same thing to Joe Kim. Thank you for joining. Just became a member. It's because I love your consistency in these market preps. They truly help me in my everyday trading. So I appreciate that a bunch. I'm glad that you are, I'm glad that it's just not an entertaining thing to come tune into and there's actually some actionable takeaways for people to trade from. All right. I think that if you look at certainly like mainstream media, they don't do anything to actually give you an actionable trade plan or setup, or they don't look at the market the right way to give you anything actionable. They're just like, hey, here's some headlines that'll get clicks. But anyways, thanks CNBC for giving us the headlines, but we're going to move along for our own analysis. Here we go. What's going on with the NQ 4-hour? I mean, the move is still parabolic. It's making a convex or concave, depending on what way you're looking at the curve, move in the upward direction, parabolic squeeze. It's still very much so on the table, so I would understand the skepticism about new money longs up here, but from a trend perspective, the trend is clearly up. There's no reason to really be fighting that at this point in time. We are sitting on a higher high, so we can afford a higher low pullback on the 4-hour and not really jeopardize the trend here. I will say that on Friday, things slowed down a little bit in the NQ versus the ES, so if there is going to be a short, it may be a better short idea in the NQ, right? So let's go to the hourly and keep on whittling down through the time frames, understanding where we're at positionally in regard to the locations around us. So you can see on the NQ, and let me just do this. Let me just do this. We'll look at the extended hours in a moment. I wanted to illustrate how Friday was much different in the NQ versus the ES, right? We basically set the entire day's range in the first hourly bar and then do nothing, whereas the ES clearly trended in the upward direction after the opening sort of breakout, right? So big difference between the two from that perspective that's really noteworthy. If the NQ, and this is just easier to illustrate with after hours off right now, if the NQ is going to see a slip back down, right, it's all about, I don't know why that happens, but anyways, there we go. Sorry for the weird zoom. Come on, Thinkorswim. Play nice this morning. If we are going to slip in the NQ, right, this prior double top, which broke for support on Friday, don't get me wrong, that was a bullish move. But if there is going to be a downdraft out of the NQ, it's probably a failure of that level to hold lower high underneath, and then we start looking for something that does this, coming into the support, resistance, and breakout points from here, closer to 14,375, all right? So the after hours off version of the hourly chart just illustrates this a little bit better. We can see where those levels and zones are coming from a bit more clearly. If we do breach the top of this, let's see what we've got on tap overhead. Massive gap to be contending with. And to look at that, let's just go and throw on the 360 chart and look way back to our left. There it is. All right, so if I zoom in on this, that yellow bar is coming from this gap right here. And even beyond that, we have next resistance closer to 15,250. Please do not misunderstand what I'm saying. I'm not calling for this. I'm not calling for this on today's session. We will take it in stride, just pointing out where the structure is in relationship to where we are currently trading, okay? So let's go extended hours on now so we can at least kind of see and understand what's going on in the post-market, pre-market. We're inside the previous day's range. Once again, we know that this was all set in the first hourly bar on Friday. The consolidation is above us. We have fallen kind of underneath that in the pre-market, which is noteworthy, and once again might build a small, probably a small case that the NQ is a bit stronger of a short, look. If the market's going to pull back today, the setup here is a little bit stronger on the short side. So let's take a look at the 15-minute chart, ask ourselves the 3 questions, just kind of understand what's going on here, right? Question number 1, prior day's range, where are we? Certainly inside, that goes without saying. We're certainly more centralized in the previous day's range as well in the NQ, more of a balanced indication. ES is kind of holding up in a little bit more of a bullish, front, if you will. Question number 1.5, though, because that is what we always ask when we're inside of range. Where are we in relationship to value area? Technically in value, but certainly lower in value as compared to the ES. ES is a bit more centralized in value. The NQ is right on the lower edge of value. So it's still a balanced indication, but once again, if we think about this as consolidation, which is basically what sets value area low, then we're, for the most part, struggling with that. It's not like we're opening above it or even in the midpoint of it. We're kind of just struggling towards the lows of the value area. So I would think of that as a slightly more bearish indication as compared to the ES, at least, all right? Question number 2, Overnight range, where are we? Here's the overnight high, here's the overnight low, centralized in the overnight range, balanced indication. Question number 3, last but not least, where are we in relationship to the overnight inventory? This is much more net short, right? This is almost 100% net short, all being underneath the prior day's settling price. So with that said, if we're 100% net short here, we know that the move in theory may correct that overnight inventory and squeeze in the upward direction. Now, because of question 1 and 1.5, we don't really have any shock and awe here that would provide a reason for markets to correct the overnight inventory in a massive way. Everything's balanced, everything's kind of neutral, so maybe even if there is a little bit of a move in the upward direction out of the gates, something that I would watch out for, I'm going to clear this up, a situation I would watch out for is like, okay, if we do that, what is the interaction at the overnight high? And if we reject there, that's a pretty clear indication that I do think bears have more of an edge here. The slowdown is much more observable and tradable in something like your NQ because the overnight high is a lower high underneath the consolidation and underneath the value area high from the prior day, right? So watch your overnight high like a hawk here out of the NQ on the open. If we go opening range that breaks, looking for a rejection off of that, then sort of this opens your door for downside. The first short indication would just be underneath your value area low. So opening range, failure here, whatever. Just like the ES, lower high underneath the low of day or underneath your value area low, underneath your prior structure from here. That's interesting in the downward direction into 14.515, we'll call it, just for round number's sake, overnight low. And then as we just saw on the hourly time frame chart, this represents the prior double top from back here. That was, I forget what days, was that Wednesday, Thursday, back to back? Perhaps, or maybe it was Tuesday, Wednesday down Thursday, back to back, right? So regardless, this is a known area of support because we are above it. It's clearly the overnight low, as well, supporting off of it. So don't overstay your welcome here, shorts, if the market shows some kind of signs of finding support there. But you can continue to hold them if we break through it, continue the lower high sequence underneath, then the deeper pullback may unfold underneath that 14.515. So the downside here in the NQ does look a little bit more tradable, a little bit more structurally viable as compared to the ES. The ES is definitely a bit stronger in that regard. If the NQ does move higher, it would have to be from like an opening range, whatever, break and like higher low. I want to see acceptance over these wicks from Friday's session, right? Because the NQ on Friday basically did nothing after this opening volatility. Nothing. This is nothing, right? Look at that price action. It's sideways. There's no trend. There's upper wicks. There's lower wicks. It's ugly. There's nothing there. All right. So I know that was intense on the eyeballs, but it illustrates the point. There's nothing going on there. Okay. So bulls really have to prove it if there's going to be any upside out of the NQ today. If you are going to try to look for upside, I would say that the ES is probably the stronger look. If you're looking for downside, the NQ is probably the stronger look. All right. So we understand our outcomes here. We're moving along to something like our good friend Russell 2000 and the small caps. What's going on with Russell? Let's take a look at the 4-hour time frame chart, keeping things sequential here, moving from the highest time frames on down. 4-hour time frame chart shows us that we did indeed get a strong break of the range on Friday's session. This is very important because we know that the Russell acts as a risk on versus risk off proxy for broad markets. Now, if you want to get really, really nuanced here, really nuanced, technically, this move was, I would say, driven by the NFP, non-farm payroll report. And the NFP revealed that a majority of jobs right now are being added in the small cap sector. Now, if you think to yourself, that doesn't seem right, I wouldn't call you crazy for thinking that. All right, we're still seeing fewer jobs added or even a lack of jobs added. We're reducing jobs in large mega cap companies, right? And you would have to think to yourself, okay, probably larger companies pay a bit better, just because they have the buying power in the jobs market to do so, offer better benefits, right? So if you think about the trickle down effect, jobs and the economy should trickle down the strongest jobs from up here. Let's call this mega cap tech, or what, it doesn't have to be tech, but let's just leave it off as mega cap, right? They trickle down, and those people have spending power to use at medium-sized businesses, and then those people get employed, right? And then that trickles down to small businesses. All right. So typically the trickle down should come from the largest companies showing stability out of consumers, right? And it shouldn't be the other way around. Now, could there be a changing worldview dynamic? It's possible, but we haven't seen that in history. So this is something to just keep an eye on. It's not the end of the world. Once again, if you're a day trader, this means nothing to you. If you're a day trader, this means nothing to you. If you come here because you like sort of the well-rounded approach to the markets, then this might be a data point that you carry forward. That's all. All right. So that's that. All right, continuing along, moving along. If we zoom in to the hourly time frame chart, we know that we have a break at the top of the range. Of course, the most constructive thing would be a higher low above and continuation. But if we zoom in over here, what else do we see? I mean, Friday spoke for itself, massive move in the upward direction. And might I add, it wasn't necessarily a short squeeze, was not necessarily a short squeeze here in the upward direction. All right, so because of that, I would sort of, we're not blindly trusting this move, but I would have more faith in it as opposed to a squeeze type move. And we talked about why this is the case in the weekend video, so you can go back and watch that if you want the full in-depth breakdown. But for the most part, 1820, key support. Are we pulling back? Are we sliding in the pre-market? The answer is 100% yes. Are we giving back, quote, too much of this move? No. No, we are not giving back too much of this move here for it to be unreasonable. So 1820 support is your key level out of the Russell for this morning's session. If we hold up here, really constructive for upside out of this market. Notice also that there was an attempt to open on a gap up initially as the Sunday night futures opened specific to the Russell. It was promptly rejected, but we don't have any exploration in the ES or the NQ over the prior high of day in the overnight session. So is there continued bullish sentiment here in the Russell? It would seem like the answer is yes. With that pop, mild pullback, as long as we're over 1820, bulls on parade. All right, bulls on parade. Okay, if we fall underneath 1820 for all the shorts, let's go to the 15-minute time frame chart and walk through our situations here, right? If we get a pullback that starts to sort of support in here, so you're looking for any very mild intraday hammer candles, that's a terrible hammer. Let's go longer, lower wick on that guy. Still looks very lopsided. I can't deal with that. I can't deal with that. Here we go. There's your hammer. Much better. If we get one of these guys, if we get some of this going on, if we get one of these, you guys know the deal. Any reversal pattern, anything that really starts to show signs of slowdown on the pullback at 1820, it's very, very constructive on the daily time frame chart. Very, very constructive, staying over the top of the balance range. Now, if we break underneath it, okay, it's not the end of the world yet. We know that we do have some structure underneath us that could act as a higher low still. But the lower high here at least gets us there. Value area rotation would be on the table. Target 1805 and then prior low of day 1790 is a key zone. If we go back to the hourly, we know why. If we just, we don't need to auto zoom that. We don't need a new level. We just need to zoom in. 1790. Breakout from here, here, here. It's where it all came from on Friday. Gap up, right? So that's going to be your key level. All right, 1790 on the deepest of pullbacks. Really don't want to go any further than that. Otherwise, we jeopardize just falling back down into the daily balance. All right. So those are your Russell futures. Let's take a look through from this perspective, our ETFs in the cash world. So the spiders, right? Spiders are opening up here on the hourly time frame chart. Remember, folks, that this has now been adjusted to an hourly. We have extended datas turned off. That way we can kind of see the structure a bit better. But we know from based on over here, this is your overnight session. This is a 30-minute chart on this side. We know that we're opening right here. Okay, so what does that give us? Just like what we talked about on the ES futures, it's very simple. A break, retest, and higher low after an opening range, after a break of this as a flag above 428.50, very tradable in the upward direction. 428.50, that's going to be your level to pay attention to for upside. It's got to be consolidation for a flag, right? We get something that looks like this. And then if we get the break and higher low above, we will trade for upside outcomes with a tight stop just underneath. If we see a fake break of 428.50, meaning that we go opening range, break, but we never get the higher low above. Remember that we need the higher low above to confirm this because we're playing around with fire at the higher high in the trend sequence. Because we're at the higher high in the trend sequence, we need the higher low above if we're going to go with it. Because or I should say rather, if we don't get the higher low, we fall back down. We know, and we just talked about this on the ES, if we take out the low of day, Or if we take out the overnight low, which I'll give you that number, it's at 427.25, 427.25. If we take that out, we can start a deeper pullback here. A deeper pullback can definitely unfold, and you're just going to want to watch out for probably 424, a retracement of the Friday session, and we'll go in stride from there. All right? So lower high underneath the low of day, lower high underneath the overnight low, 427.25, and we will look for some downside outcomes. Anything that's playing around in between, I think the I think the market chops in there, and I don't really think it gives us too many clean indications. So 428.50 break and retest above is bullish. 427.25 break and retest underneath for the lower high. That's where you look for your continuation in the downward direction. All right? That's playing the pullback. So spiders covered, complete, finito. We talked more about the ES. If you're interested in that, it's just a couple minutes back. Let's take a look at the QQQ. What's going on with the QQQ? NASDAQ 100. We just talked about this on the NQ chart as well. There's clearly your slowdown on the Friday session versus the ES, which had something that looked like this and then based into the afternoon. In the pre-market, that's this over here, you can see we're opening more centralized in the prior day's range. And once again, if I just draw a line here to illustrate where we're opening, this is the intended open at 354.25. Don't get me wrong, folks. There's a lot of time between now and 9:30 when that bell rings, so it may not stay here. But for the most part, the indication is we're opening at or slightly underneath the afternoon consolidation from the Friday session. At, slightly underneath the afternoon consolidation from the Friday session. If I zoom in on this, it almost makes sense to just leave that level on there as an area of support. I'm not going to do that, but you get the idea. If the market opens underneath, it's a stronger indication that, okay, look for this. You're looking for the prior low of day and that double top, which we just talked about in the NQ. There it is. In terms of the QQQ cash, it's 352.75. 352.75. That's your first short indication. And then the stronger short indication is a retest lower high underneath for continuation back down towards here, where the breakout came from on the Thursday session. Remember that the breakout on Thursday is clearly much stronger than any mild, I wouldn't even call this continuation on Friday. It was a gap, filled the gap, and then sort of consolidated out higher. It's not really continuation, right? So those are the two levels. 352.75 is the stronger level, and 354.25 is the, I don't know even that I would call it weaker, but it's the more nuanced level based on the afternoon consolidation. Just like in the ES, if we're looking for upside, we have to be patient. We have to wait for the break of all of this, a retest higher low above, and then we're aiming for this gap. 356.79 closes up to 359.88. All right? So willing to go in either direction here, specifically because of where we're at in the trend sequence. We are sitting on a higher high. It's not unreasonable for trends to continue, but we also know that it's also not unreasonable for the market to pull back here. When and if a pullback does unfold, do be cautious and look for support at 349. Holding up for a higher low here is your picture perfect setup for the buyers, right? If we're looking for a pullback and we're looking for a higher low, 349 is it. We're looking for a hammer candle. We are looking for a double bottom, all the same things that we just said on our other charts, right? All of these things fly at 349, okay? And then, like, truly line in the sand, this is going to be something that we talk about throughout the duration of the week if there is perhaps a larger downdraft, but we know that this is a big, big line in the sand at 346.75. That level speaks for itself. Clearly, if you want to think of this as a pie-in-the-sky double bottom, it's the double bottom, but more importantly than that, it's a poor low from the Tuesday, overnight, and then Wednesday sessions, right? It's where the Thursday rally comes from. So for the most part, that's a very dangerous level if bears start getting down towards 346.75. Dangerous because, looking left, you can see clear as day, there's virtually no structure there. No structure there. All right? That is that. Let's continue along. Take a look at the IWM Russell 2000 and the small caps. What's going on in small cap land? We just talked about this on the Russell futures. Very clear break at the top of balance here over 179. Any pullbacks want to hold that 179 and do something that looks like this. That's kind of the reasoning why on the Russell futures I was saying, we could technically go a bit deeper than the level we were last looking at. If we just go back over here, this is not necessarily the equivalent of 179. 1820 Russell is technically higher on a relative basis than your 179. It's more like in here, in alignment with that prior high. But regardless, you understand the vision of this chart, right? We're breaking a big time range in the upward direction. Whenever we break a range, we are always looking for a range double. So I'm not calling for this over one session, but a range double brings us up towards that 186 level. That would be the goal target over time as we breach this range. One thing to note is that we've already seen a look above and fail. So we already have a roadmap, so to speak, as to what this might do if the market fails to hold 179. We should probably be looking for our big gravity point here in the IWM, which is 175.75, closing the gap from the Friday session, and then we continue to sort of trickle on down. All right. Pre-market, we're opening here right towards this 181. There's no big takeaway from that. We're inside the previous day's range. We're towards the upper third of the previous day's range. We're sitting on new overnight lows. I mean, it's P for patience, right? It's P for patience out of the NQES Russell. There's nothing crazy about the indications here. I would say if we do pull back, I certainly would not want to be the short trader in the IWM. I would prefer to be the short trader in the QQQ or the NQ futures. And I would let this thing settle in. I would let it settle in. If it does want to pull back and support off of 179, great. Very, very, very constructive look on the daily time frame, on the hourly time frame, and we'll take it in stride, remembering that this is a risk on versus risk off proxy. That would be a bullish indication. That's risk reward. This is risk on. This is risk off. There we go. That's much better, clearer. So 179, right? It's as simple as that out of the IWM. There's not much else to talk about. If we go under 179, you guys know the deal. Lower high starts to target the gap close, and you get your look above and fail. We're just not even. It's not worth having that conversation, as the open is quite literally 2 points above the level. All right, and the average range is somewhere in the realm of 2 points, right? So an average pullback, an average day pullback, if it's Armageddon, gets us there and maybe a little bit underneath. It's, we know 179, okay? So that's been fun. That broad market's always a fun one to go through, but look at Apple. Look at Apple. I mean, my goodness, folks, basically sitting on all-time highs, big gap up here this morning. Very, very impressive. There's some sort of event that's taking place, if I'm not mistaken, right? So Apple quite literally pushing into new all-time highs, trying to in the pre-market. And here's one thing to remember, right? Generally, the move will not end, or the move will not put in a high of the entire move in a pre-market session. The market wants to see the apex, so to speak, the pinnacle of the move be formed in a regular trading hour session, simply from a liquidity perspective. So, if we do put in a new all-time high here pre-market in the next 27 minutes, it's very unlikely that we don't test that in the regular trading hour session. All right, it doesn't mean it has to happen today, but perhaps tomorrow or the next day. Markets don't really make, it's just, of all the all-time highs ever set, I think I could count on one hand how many were, exceeded in a pre-market and then never tested in the regular trading hour session. I'm going to have to run a study on that with some sort of script or something to pick off all of them, but that would be an interesting thing to do, just so I can prove it. But take my word for now that we usually do not set an all-time high extreme in the after-hours session and not at least test it regular hours. Again, this all boils down to liquidity and what's going on there. So what does that really leave us with for the session? What does that really leave us with for today's session out of Apple? Well, first thing that comes to mind is that, of course, gap rules will be in play. If we fail this overnight high regular trading hour session, so we open here, push for a new all-time high, and then come back down under the opening print, of course, not too far-fetched to imagine a pullback to 181.75. 181.75, all right? So that would be the pullback on a failure of the all-time high, failure of the overnight high. And it certainly gets interesting for that short to unfold because there's enough range here to really be trading for. It just depends on whether or not Apple will give us a clean first couple of minutes or if it's going to be really volatile like what we essentially saw on the Friday session, right? So watch out for that setup. Failure over 183, basically, you could use the round number. I would use whatever the overnight high technically is. Failure to accept above it, short through the low of day, opening print basically, then looking for just a pullback. When and if we get to the prior high of day and close that gap, you definitely don't want to be short anymore. Even just talking about this through the gap rules framework makes me shudder inside, makes me quiver. Shorting something at the all-time high, relative strength is through the roof. the setup is technically there. Don't get me wrong. The setup is technically there because the gap rules framework says it's there. We have overnight inventory that's net long at bad location. If they don't get paid, it would be reasonable that this inventory corrects. But I mean, nothing other than the Nvidia gap up, nothing's been dealing with all-time highs. So when I just vocally say out loud like, "Oh yeah, we could technically short Apple at all-time highs because of the gap rules," I have to almost slap myself in the face and be like, "Whoa, whoa, 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 whoa. What? Where, what, who, when, how? Like what do you mean short Apple at all-time highs?" It's kind of crazy. But regardless, the technical setup is still there. All right? So emotions aside, we kind of put emotionally a lot of weight on the all-time high, but folks, remember, at the end of the day, it's just a number. It's just a number, right? So if we can exceed it and then cannot hold it, the gap rules would tell us we should close that gap. We should close that gap, okay? That's the logical way of thinking about this and not being blinded by, the shiny object, all-time high. If it does gap and go, right? So remember, there's two things that must happen if the short trade is on the table. Number one is that it must fail the overnight high, all-time high. It must not be above that level. So if it is above and it continues to set new all-time highs on today's session, then guess what? There is no short setup. I don't want anybody to misunderstand what I'm saying here. The only short setup for the gap rules is if we fail, number one, the all-time high, overnight high. If we're above it, there's no short. The second thing is that we need to be underneath the opening print. We need to be underneath the opening print. So say we do something like this, and then we start consolidating here, right? But we never flush the open. There's no short. There's no short. All right, so the gap rules must pan out. Both things, overnight high must fail, open must break down if the short for the close of the gap is going to be on the table. When and if we get here, of course, we're always looking for a gap fill reversal. That's the most constructive thing for our daily time frame chart, hourly time frame chart combo. All right, Apple complete. Obviously floating higher. $1.50, baby. That's all we got. $1.50. Very cool. Netflix, what's going on over here? Clearly not as much relative strength, opening inside the previous day's range after this weird little move lower in the pre-market. So nonetheless, opening inside the midpoint. We know that this is an inside bar Friday compared to Thursday. So there's not a lot to do until we can breach 405 in the upward direction. Carry forward 405. 405 is your upside level out of Netflix. If we can breach it, it's kind of this flat top resistance. Good things happen. If we stay inside of range, I wouldn't touch it with a 10-foot pole. And if we break down underneath 390, 475, look for the lower high underneath. Decent amount of range to trade for, kind of underneath 390 in this zone here. Notice that the structure is not all that great on the hourly. All right, so that's kind of your downside. Lower high under 390, 475, and then flush the 390 unlocks the door to the 375 pullback. So that's Netflix. All right. A little bit more straightforward because of the inside bar setup from Friday. Tesla, what's going on? Tessie, Mr. Musk, gap up, yes. So opening on a gap up here over the 216.65, breakout point from the Friday session. I was a little bit more optimistic given this little breakdown into the close from Friday that we could have looked for a pullback to test the 208.25. It just didn't happen. So overall, I think that Tesla is a patience play, gapping up and over the level, gap fill reversal, or any sort of morning pullbacks that respect 216.75. That's definitely tradable here. So pullbacks that hold that level get interesting. Next overhead zone is way up there at 230. So there is some room to run if you wanted to structure a trade like, okay, we open here, pull back. If you can catch it long off the pullback, and if we get it in the first place, stop here, enter here, and then, trading up towards that 230, your risk reward is very favorable in that kind of instance, right? So just bear in mind that that's quite a range. It's quite a range. 15 points is kind of outside of the average true range of Tesla. It's definitely one of the more volatile and movable stocks, but it's definitely pushing it. It's on the upper bound of what Tesla can typically travel. All right. So instead, you'd probably look for a tighter setup here on a lower time frame, and then manage your expectations of 230. Just know that you can trade in the upward direction. If we get a gap and go, you're just going to have to be very patient and methodical about searching for your first kind of higher low pullback over an ascending VWAP or something like that. Obviously, the context here is very bullish. There's no reason to be overly aggressive on the short side out of Tesla. Not seeing the obvious short. Next up, Google. Google is a stronger short indication. We talked about this in the weekend update video. And if you were watching on Friday, you know clear as heck why. There was an attempt to break out early in the morning session. This was something that we were watching in the Discord. The pullback never actually panned out. The pullback never panned out to respect 124.75. Take a look at this chart. You can clearly see that there was a move way above, then it came way back down underneath, to the tune of 75 cents. Don't get me wrong, there was a secondary push for consolidation here, closed weak underneath. The chart was it was not tradable on the pullback after the morning session there on Friday, and we're currently opening, just like the NQ, underneath that consolidation. So this is starting to feel like a look above and fail. Short setups go in Google, and we're targeting the bottom end of the range closer to 122.15. 122.15. So any lower high rejections, any prevention from a recapture of 124.75, that's looking good to me for downside in Google. Obviously, pair that with a broad market that's pulling back, and that's the most constructive way to trade some downside, I believe, for today's session. So Google, to me, is a top watch for downside on a pullback if markets are weak this morning. All right, Google is a top watch. Next up is Metaverse. What's going on with Zuckerberg's Fantasyland? And if we take a look at the hourly chart, clearly getting a nice little uptrend forming here with very mild pullbacks, putting in some consolidation, and the concern is that we're opening weak on a very minor gap down at this point. So once again, if you're going to look for a short, it's got to be in Google. It's got to be in Meta. You could look for a gap fill reversal here or just any rejections underneath 270.50. Rejections of 270.50 come from, if we zoom into this hourly chart, clearly there's your consolidation on Friday. It really is consolidation. It's not trend at all. It's just sideways. But if we break down under 270.50, it's a failure to hold on to the breakout point from the Thursday session preceding. So if we go underneath, there's your pullback, right? That's what you're trading for. And at 265.85, that's where I would say, right, look at the trend of what's been going on here, right? What happens here? You look for a higher low, and then you look for continuation, right? The trend is up. We know we're trading through this gap range. There's still some gap to close overhead. That's the primary look out of Meta. All right, so if you're a short and you want to trade, don't get me wrong, folks, there's decent range, 270 down to 265.85. Let's just round off and say that it's a 5-point move, right? That's totally tradable in the downward direction. It's not like I'm saying don't trade that short. I'm just saying know where you're at in the trend sequence. If we're coming into this level, and you start to see this, and you start to see this, and you start to see this, right? Or you just start to see okay, this, and then this, right? What's going on the smaller time frames? Building out one of these, all right? So that's it. Under 270.50, check out 265.85. Currently in the pre-market, we are gapping down underneath it. A gap fill reversal would totally be reasonable to unlock that pullback here in the first place. If we just accept inside the previous day's range, it's neutral, it's choppy, there's nothing to do there. The breakout will come back over 274.25. 274.25 is the level. All right, 274.25. Perhaps I should throw that on the chart. There it is, 274.25. Next up, NVIDIA. What's going on with NVIDIA? The AI mania, the bubble. Does it all continue? Not really. It's coming in a little bit. We're underneath that 389.75. 389.75 comes from right here, prior top of the original earnings gap up range, and you can currently see that we're under it. We're opening right about in here. So just like your Meta, you're probably looking for something that does this. Gap fill reversal downside brings you to 379. That certainly starts to imply a bit of this going on, and a flush of that neckline could potentially get nasty. Please. This is a drawing with my good old-fashioned white crayon on the chart. I am not implying that this unfolds on today's session, and it doesn't have to happen at all ever, but it's something to be mindful of if we start breaching the equal lows at 379. All right? So we can draw these patterns on the chart. We can get fancy all we want, but remember, at the end of the day, a pattern just tells you where your higher highs or lower highs are and where your lower lows or higher lows are. Right? That's all a pattern does. They look pretty, they're easy to remember, but that's all it does. So if we breach the lower lows, right, it would seem logical that we could test the top of the gap, and then there's nothing until we get back down to 305.87. All right, so we understand that. We're all on the same page here. I would be very cautious of 389.75 to get us to that equal low in the first place on today's session. Anything that pops and stays in range here, there might be some opportunity to look at, let's say there is a very sharp recapture and higher low over the 389.75. That would be interesting just because obviously there's momentum upside here. This did produce a higher high above this, right? If you count from here to here, it's definitely a lower high from here to here. Let's not get it twisted. But the fact that after this pullback unfolded, we didn't do this, right? We went here instead. this could be interesting for the beginning of something that may do this. All right. So all I'm getting at is you still want to treat NVIDIA like, you don't want to trust this thing any further than you can throw it. And right now you can't throw it very far at this very heavy, expensive price, $400 even. All I'm getting at is, there might be a little upward rotation if you can spot that based on this higher low. That's all. So 389.75. At the end of the day, the pivot still stands. 389.75, whatever side of that we're on will likely dictate the setups that we're looking for. Longs above, shorts more favorable underneath for a gap fill reversal. There goes the voice. Microsoft, what's going on with Softy? We've got 9:16 on the clock. We're doing pretty good on time this morning. Fantastic. We're going to have some time to hang out in the chat here. Microsoft, equal highs, all this good stuff. Where are we opening in relationship to them? We're underneath and in this consolidation zone. Microsoft strikes me as a bullish chart here because of its open. It's not overly in jeopardy of a sharper pullback, right? The trend is clearly up with higher lows, higher highs. And if we can get this equal high break, Microsoft is in play to the all-time high. Remember, that's just a hop, skip, and a jump away like Apple. Apple's obviously on it, but Microsoft is just a hop, skip, and a jump away at 343.50. All right, so if we can get the equal high break over this resistance at 335.50, then, kind of game on. It's game on to get there. So pullbacks get interesting, or consolidation, I should say, gets interesting here. As long as we stay over 331, this is on my radar as an optimistic long. So if markets do hold up, we're looking at the Microsoft play here. If markets fall apart, we're looking at Google as a short setup, right? So that's that. That is that. And again, the level strike me is very, very clear on Microsoft. Next up, last but not least, the mini beast. We've got Amazon. What's going on with Amazon? So this is another short indication. It stacks up as a short indication because the daily bar looks something like this. Inverted hammer, if you were to extrapolate that out. If we fall underneath that inverted hammer low, a deeper pullback can unfold. You can clearly see a lack of buying acceptance over that 124.50. We're opening underneath in the pre-market session at the lows of the previous day's session. So a breach here, or just continuation, it could be a couple of things. It could be a lower high underneath, then continuation lower. It could be consolidation that then breaks the opening range in the downward direction. Those things are on the table for a pullback in Amazon to look for 121.25. 121.25, right? That level comes from, very specific here, this prior resistance, this prior support fell off the open here, and then once recaptured, really led to a better breakout. You could make the argument that there might be a level here at 123.15, was it? 123.15. There might be something there, but the stronger level is at 121.25, all right, on a pullback. So there's that. Once we get here, just like everything else, because we are in a strong uptrend, I mean, folks, we're going lower left, upper right. If we get a hammer candle, if we get a double bottom, if we get an inverted head and shoulders, all that stuff goes, the typical, you know my spiel at this point, it all goes at 121.25, all right? Straight up continuation in the upward direction, like if we get acceptance here, I'd be cautious about that. Not only are we sitting on the higher highs, but there's clearly a lack of acceptance on the Friday session as exhibited by the candles, all right? So that's it. That's the core list of companies. We've gone through everything that's important there. Let's take a quick glance at the ES, make sure that we don't have to adjust our analysis, and I have a feeling that the answer is no. Yep, everything still stands here as well. And I'm going to take a brief peruse through the chat, see what we've got going on over there, address any key questions, comments, concerns. And if you are going to tune out because we're nearing the end of our analysis, the market open is in roughly 11 minutes now. I do appreciate you tuning in. If you're tuning out, again, we're going to hang out here for maybe like 5 minutes or so. I do appreciate you, and hit the thumbs up button on the way out if that's the decision you end up making. But all right, good morning. Good morning, everybody. Nice to see you all. Sammy Sams, John Cardozo, nice to see you. All right. What about the spike on the QQQ? Is there any changes there? That's from Edwards L. Did the Qs spike? I don't know. Let's take a look at the NQs. Did the NQ do anything interesting? Not really. Not really. I mean, there's this little thing going on in here, but it's not changing the analysis. Maybe we're a bit more firmly inside the value area now. Maybe we're a little bit more firmly inside of this range now, as opposed to that red, but it's not really a spike, right? Make sure, Edwards, I'm not, obviously I'm not accusing anybody of anything, but I'm just saying, if this little upper wick here felt like a big spike to you, I would recommend that you use a higher time frame, something like a 15-minute time frame chart. I mean, if we drop this down to a 1-minute time frame chart, let's get real crazy with it, right? And this is just a learning lesson for all of the chat. I'm not, it might feel like, oh, this is a very extreme move, right, on a 1 minute time frame chart. Of course, it looks like an extreme move. Like, this is like, whoa, what's going on here? Why is the market so bullish? But if you zoom out a little bit and give yourself that higher time frame perspective, I mean, it's really a blip on the radar. It's not a whole lot of anything impressive, especially like compare that to the range on the opening 15-minute bar of NQ on Friday, right? It's hardly anything. So, oh, that might just be a glitch. If you look at something like the QQQ, yeah, if you're referring to this kind of madness up here, if you're referring to that, that's usually just I don't really read into that. It's an anomaly. It's after hours. Maybe there's an order that was floating up there that got randomly filled because someone, pulled the offers or whatever. But it is what it is. It's not. Basically, my takeaway is I wouldn't read into it. I wouldn't think of that as significant. I would just look at kind of where the cluster of price action remains, where the bulk of the price action is, and say, this is kind of what's real. All right. We can take a look at Oxy. That's for Maria. Let's take a look at Oxy. That's, of course, in the energy industry. So OPEC talked about prices going up, right? OPEC and there was a headline from was it related to Saudi regulators? But regardless, there's your sort of level to break out of on the hourly time frame chart, clearly gapping up. So gap rules are in play. Gap rules are in play here out of Oxy. I do want to look at the daily time frame chart just so I'm not missing anything. Okay, yeah. So this actually is fairly interesting. If you want to think of this as a double bottom, clearly we're breaking out and gapping up over the neckline there at $60.25, 27 cents, whatever. So if the market does pull back in Oxy, right, you're looking for support in a picture perfect world at that neckline, and that keeps this bullish, looking for a rotation higher. Energy prices up, inflation up, probably not the best indication, but remember, folks, at the end of the day, green pressure is green pressure. We don't want these things going to zero, that's for sure. So yeah, I would think that gap rules can be in play, and a partial gap fill would be interesting off of this neckline area at $60.27. So there's that. This is not something that I trade or have ever traded, so this falls pretty low on my tier list of things to be watching, but that's the analysis I would do if it were going to be on the watch list, all right? So hopefully that helps, Maria. Double bottom on the daily. It's also happening, like, if you were to treat this as like a weekly zone of support down here, touch zone, touch zone, touch zone, like the double bottom is happening at a logical area, right? So that's that. Top of the weekly. Yeah, Raz, here we go. Raz is asking about the expected moves on the SPY and the Qs. So it's 433.50 upside SPY, 422.30 downside SPY. 433.50 upside, 422.30 downside. And if we go on over to our QQQ, we have a 361.50 upside, 361.50 upside, and 347.75 downside. 347.75 downside. All right. Those are the two ranges there. Yeah, Warren Buffett bought a pretty big share of Oxy a while ago at this point. Maybe he's coming back into it. He might be coming back into it. Yeah, that's interesting. AN, we've just done a full run through of the SP. You put SPX in the chat, but it's the same thing as the ES, and it's the same thing as the SPY. I mean, we've covered the S&P marketplace pretty thoroughly for this morning's session, so I appreciate the ask, but we've got that covered already. What else is going on here? Still managed to get a shout out from John Cardozo. Yeah, you're late to the show, man. Usually you're like one of the first people here. What else? Questions, comments, concerns? I blindly listen to YouTube titles only, so topside for SPY is 485 and downside is 300 this week. Bobby D hitting us with the all-time sarcasm on the morning session. That always brightens my day. That's cool. David Ball gifting another Trade Brigade membership here to the channel. Who's the lucky winner? Tanspace X. Say thank you to David Ball. Cool stuff. You did that last week too, David. Very, very appreciative of that. And I'm sure the receivers, it should be as well. So that's awesome. Anything else here? Is the pre-market rigged from Mr. G. I wouldn't call the pre-market rigged. I would just say that there's a lack of liquidity and the market moves around in a more violent manner. Kokeshi Dolls, appreciate you tuning in. Snow, you got some trades off in Snow. Fantastic. Love to hear that. What else? Do I think that there will be a pullback on ES before a move higher? I would prefer that, Zach. I would definitely prefer that, Zach. If we go back to the ES, again, my preference for the day, I sort of illustrated this earlier on in today's stream. My preference for the day would be opening range, break, retest, higher low above the prior high of day, or deeper pullback to here that does something like that, right? Respects the top of the breakout from the Friday session. Dave does the wave. Thanks for tuning in, man. Appreciate you. All right, I think we're going to wrap it up at that. We've got 9:26 on the clock. This will give you a couple minutes to settle in before the bell, get focused. Don't forget to check out the links down below in the description. The Discord is there. You can come hang out with us. It's totally free. It's just a redirect link. There's also, if you want to get fired up this morning, we've got some music playlists down there as well via Spotify. Right? There's a link down below in the description that says music to watch markets by, which is a reference to a very, very old and perhaps inappropriately dated song. If you know, you know. I'll just leave it at that. But yeah, check out that link. It's a fun little collection of playlists that span a lot of musical horizons in my estimation. I'm going to be firing up. I think I'm going to be firing up upbeat trend days because I got to put something on that, brightens my day in stark contrast to the 50-degree rainy cold weather that has, shrouded us this morning. All right, so I'm looking for some internal excitement with those playlists, and then hopefully the weather pattern breaks and we get some external excitement with the blue skies returning and nice warm sunny summer weather. So with that said, everybody, thank you so much for tuning in. Appreciate you being here. Once again, links down below to the Discord if you want to come hang out with us there, and I will catch you in the next one.